Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon, good evening, and welcome to Traders Workshop for Tuesday, February 27th. I'll be your host, Tom Schneider, CMT with NinjaTrader. And on Traders Workshop, we like to bring in our NinjaTrader Ecosystem partners to talk about their expertise, and hopefully you can learn a little bit more about what can be done in the NinjaTrader platform, or see what services the partner offers to help you become a better trader. I do want to remind everybody that we do have a chat room. You can go to ninjatrader.com/events to visit the chat room. And if you have any questions for our guests, be happy to talk to them during the show. So that's ninjatrader.com/events. One little bit of business. I do want to talk about a previous guest we've had on here, a repeating guest, just like our guest today is a repeating guest. One of our repeating guests, Brent Kachuba at Spot Gamma, has informed us that tonight they're having a webinar about the options market. Invite you to come along, and that's tonight. I believe it's at 8 o'clock Eastern, although you can find out more details just by going to the spotgamma.com website to find out more. Brent's been a great guest, so hopefully you can join him there. But I want to talk about today's great guest. Jim and I have been talking him up on the regular shows for this, past couple of days. I read about our guest in the books that you might get about technical analysis when you're learning about technical analysis, some of the standard books. His name was certainly a name that I came across. I didn't get to meet him until I joined NinjaTrader. So one of the great things about coming to NinjaTrader was getting to meet some of the people that I've read about and read their work. And today is certainly an example of that. The founder of ER Signals and kind of I would say the preeminent authority on cycle analysis, at least in my mind, from what I've learned, although there are many people who do that. He's the first one to actually create something that you can hold in your hand and view. So without that, I'm going to stop delaying and talking him up, and so you can see him. It's my pleasure to have back on Traders Workshop, Stan Ehrlich, coming live from California. How you doing, Stan?
Good morning, Tom. Glad to be back on. Thank you very much for having me.
I love your view in the back, the Golden Gate Bridge. I love San Francisco.
Of course, I'm sitting on the Marin Headlands, and the wind has died down, so that's why my hair is not blowing around.
That's great. That's great. How you doing? How you been?
Just fine. I had a little COVID a couple of weeks ago, so maybe I have a cough that's lingering somewhat. I hope that's okay with you guys, unfortunately. But I'm feeling fine, chipper.
Great. You look great. If you had never said anything about having COVID, we'd never know. So,
well, I should shut up about it then.
You look fine. So today's topic, something that we know you for. We know that your background is in this topic, but let's talk for those of the new viewers we have who've not seen this show before, or maybe seen your appearance on the show. Can you just give a little bit of background about how you got into the markets? And I know we could spend a couple hours talking about your experience, but how did you get into the markets? What intrigued you about the markets to make it your full-time career?
In 71, I started as a runner on the old Mercantile Exchange, and was on the Board of Trade as a runner for a few months as well. But within a year, I was in the brokerage offices of Conti, C-O-N-T-I Commodity Futures, subsidiary of Continental Grain, world's largest at the time commodity brokerage firm and became a broker a year after I was a runner. Markets fascinated me. Being a broker was a little tougher than I thought. But within a few years, I perked an interest in rhythms in markets, cyclical analysis, to a great extent because of my old friend Jake Bernstein, and came up with an idea to invent something, and it's called the Ehrlich Cycle Finder. This silly little plastic tool you expand or contract on paper charts, which I did at give or take 150 big seminars around the world for 30 years, showing people how to use it. And there's, I don't know, 20,000 give or take floating around the world at this point. So cyclical analysis is something that I have some experience with on a variety of types of charts, and we'll talk about rhythms in markets shortly. But I also spread out to automated trading systems because, you know, you guys who are just learning trading, you are your worst enemy. It's the psychology of trading that's bass-ackwards. It's upside down. It's counterintuitive. What looks good is really bad, like the stock market at the moment or NVIDIA. Excuse me about the cough. And what looks bad is really good. Also, I was privileged to work with a lot of these guys in the late 70s, 80s, 90s, like Robert Prechter, the Elliott wave theorist. I learned Elliott wave analysis from Bob. Wells Wilder, which is my favorite RSI, and I use it a lot. I have a custom version you're looking at on your screen now. Or maybe it's just me and I don't have the chart showing yet, but you'll see it in a minute. So also George Lane, Mr. Stochastic, John Bollinger, Larry Williams, and on and on and on. I can't name enough of the great people that I was lucky enough to work with speaking at these seminars. Okay, so I brokered for Beatrice Foods Corporation, traded over 1,000 bond futures in a single day. Whew, that was fun. For bank institutions, hedge fund manager for a while, 5 different technical analysis market letters. Currently, again, developing ER signals automated trading system for NinjaTrader. Also have it available for TradeStation, but Ninja is faster, quicker, better, in my opinion. And that's why I'm kind of rolling over into the Ninja playground as time passes.
So Stan, I think Mike Burke would be happy to hear that.
Yeah, I know Mike would. Yeah, Mike's an old friend.
But that's great. And so what's fascinating, I think, is, you know, the people that you've talked about, you know, that really was kind of, I think, when technical analysis or analysis of the markets in general, maybe, you know, technical analysis is one term, but it was elevated in that, you know, late 60s through the 70s period where it was just elevated, kind of like Michael Jordan came along and elevated basketball. You know, you guys came along and elevated the analysis because you had, you know, the tools were evolving that you could. It's almost like who could keep up with whom, the brains behind the ideas or the technology that gave you the ability to explore more.
It's all about the Apple computer that started the whole thing. Do you remember the name of the first software for home technical analysis?
Was it no, not technical analysis. No, I was younger then.
That's right. CompuTrack.
Yes.
Came out around 77, very popular for 15, 20 years with Tim Slater out of New Orleans. And he put on all those big seminars, the TAG Technical Analysis Group seminars. So it was amazing. I got to speak all over the United States and all over Asia, everything from Shenzhen, north of Korea, all the way down to Singapore.
Wow.
So, you know, all the major cities except Shanghai. I don't know how I missed Shanghai, but whatever. So, yeah, Kuala Lumpur down. Got some great stories about different situations and a lot of new friends and old friends now that we hang out and do what we like to do in those cities as tourists. Yeah, it's been fun.
That's great. That's great. And, you know, again, this is from me. I've been doing this for over 25 years. I still feel like a new guy, right? Because these books that you read about the different techniques, and there are the names. We're speaking with one of them right now. And not to say that, you know, there isn't more to be done, right? That's the
Oh,
great thing.
never changing.
Yeah.
It's always evolving.
Yeah.
It's like software. Software's never done.
Right. Right.
You always have to adapt to the new, Windows in these days.
Yep.
So, yep, never done. It's always improving, changing, evolving. The only constant is change. Itself. I like that one. That's
right.
a good one.
That's right. You can trademark that, Stan.
Oh, gee. Oh, first one to say that. Yeah,
That's
I will.
right.
Good luck with that. All right. So you want to start with something here?
Yeah, let's talk about the cycles. I think let's go to the cycles first, because I think that's something that well, first of all, I equate your name with cycles, so it's in the name of the tool. So
What is that? I've been recycled or what?
no cycle
No,
analysis. If we can go to
more
the
than
maybe the
once.
other chart.
I will. I will.
And that would be great. And this is what has always fascinated me about the markets, because you're always looking for patterns. You're as you're learning, you're told pattern, the market repeats, not always perfectly, of course.
History repeats itself. Yeah.
Exactly. So this is kind of like cycle analysis is all of that.
Did you know there is a 100-year cycle in pandemics?
No.
Yep. You look at several hundred years at least, and you will find, give or take a couple of years here and there, it's not exactly, none of them are exactly the cycle. It's approximately that what we're looking for and close to exact. But about every 90 to 110 years, put it that way, you've got a pandemic. And sure enough, COVID. So what are we looking at? 97 years from now?
Right. Well, yeah, and before that, what was it? The Spanish flu? Was that the
I
previous
think
one?
so. I don't
Yeah.
remember. I wasn't there. I didn't do it.
Yeah,
So,
I didn't do it.
not responsible. So,
Right.
but here we go. A little discussion about cycles. Cycles is one of the only tools, frankly, that is able to forecast into the future, and could be quite a substantial amount into the future. Not necessarily just days, weeks, or even months, but also years into the future. I just mentioned something that's a 100-year cycle. To watch telltale price activity that shows you the typical clues that a market is about to do what you thought it would, and let's just say October lows, and I'll change to the October low chart real quick here. So every October, I start to look for oversold conditions, bullish patterns, any sign that the market has gone down too much, too far, too fast, and is in the beginning stages, if not the exact single day that the market is about to turn or is turning real time, like October 13th of 22. And there's the low on that date on this S&P spider chart. Now, the E-mini is extremely popular, but it's the same index. This is the daddy, the S&P spider, or maybe the cash, but the E-mini is just a variation on the spider, and the micro E-mini is, of course, just a copy of the E-mini, etc. So if you're looking at the NASDAQ futures, you're also looking at the QQQs. There are some minor changes, but not that big a deal. The longer term pictures are very, very similar, but the short term stuff, especially for scalpers, because the other electronic versions are open a lot longer, like three times longer, basically. Back to cycles. Now, if you find a rhythm, you're going to want to forecast it into the future. And again, look just before it's supposed to happen for telltale signs that you're going to see that cycle high or cycle low developing. So you kind of need to know what you want to see in advance. And if that does develop, and it frequently does, that's why you found this cycle. And I'll look at the cycle finding process in a moment. Is it happening again? Is it starting to happen again? And if the answer is yes, do something about it. Mm-hmm. You've already looked at charts historically and saw that apparently October is a bottom extremely frequently. And here on my chart, I have the daily data for the S&P 500. Obviously, it's a continuation, if you want to talk futures, kind of a contract. It, started trading something in the 1990s. And I will go back real quick because this cycle is unbelievable. All of these green bars represent the month of October, so about 30 calendar days or 4 trading weeks, Monday through Friday, except occasional holiday, but not necessarily in October. There aren't any. Halloween, yeah, great, okay. So I'm going back to, what is it, 04? No, I'm going back to 94. This is 30 years of history. Let's do this as quickly as I can. There is a buying opportunity, and the low during the month of October is October 9th. I'm not even going to say October anymore. October 10th. Well, I just did. 10th, 29th, 28th, 8th, 16th, 18th. This is one of the only 3 examples where it didn't actually happen in October. It was September 21st, very close to October. October 10 again. So 10, 1, 25, 14, 3, 22, 10. I mean, unbelievable that every time we see October, there has been a buying opportunity, not necessarily a really big one. Now here, there was a minor low and it only lasted a week or two. And yes, it was during a top on the average. Actually looks like a head and shoulder top. What is this? 07? Oh my goodness. Yeah, this is the beginning of the subprime loan crash. That was the end of it. Well, yeah, October 10th. Big round. The Dow Jones had a 1,000 point range on October 10th of 08 in one single day. True. Now, yeah, it finally bottomed out in February, was it? March 04?
March. Yeah, March 9th.
Yeah, March 4th.
Yeah.
And that was not on this particular cycle. But again, October 2nd, 4th, 26th, 9th. Unbelievable. I hope you remember this because this coming October, I won't. I'll be looking for it again. Hey, past performance is not indicative of future results, and hypothetical returns has some inherent limitations. Have I said that once before? I think so.
I think so.
I think so. October 15. Here's September 29, the 2nd. And that's awful close to October. And November 3rd. Awful close, but no cigar. Didn't land in October exactly. 25th again, 29th, 3rd, 30th, and we're almost up to current October 4th. And then 2 years ago, October 13th, a whopper. We had a bullish engulfing ER buy signal on the bottom day in oversold condition at the bottom of a 1 year, well, almost a full year, excuse me, bear move. And what turned out to be, in retrospect, 2020 hindsight, the beginning of a bull move that we're still involved in. And I'm not going to go into market forecasting at the moment. But again, last fall, October 27th, that's a 90% track record, only 3 mistakes in 30 years. Let's go to another. Go ahead.
Stan, real quick, I think it's key to note that your indicators are not pointing out those bars are just pointing out the month of October. Those arrows you see are not because it's October. Those arrows you see are the ER signals indicator saying this is a place where we have whatever the criteria is, a buying opportunity.
Yep.
Right. And where do they fall? They fall in October. So Stan's not pointing out here's the low just because it's the October low. Those are
I am also.
But you are pointing them out that they are these lows in October can be interesting buy opportunities.
That's the start. Interesting buying opportunities in October. How do you isolate which darn day in October to actually jump in and go long? That is one of the tricks.
Right.
If you believe in the October lows, you're looking for a buying reason, an excuse, a method, a philosophy, whatever, to justify jumping in on a certain day, period. My system, ER Signals, has only really 2 major criteria involved. Now, they're customized, but if you get a bullish engulfing, which in the old days we called it an outside trading range day or a key reversal, same thing, Now we use a lot of candlesticks. I started drawing my charts by hand for over a decade until, you know, in the early 70s, until finally CompuTrack came around and you could have a dot matrix printer draw them for you. But anyway, I can't believe this is all this old stuff. So anyway, the technique of implementing a strategy and actually making those trades is not quite the same as believing that the strategy is going to provide the signal. You have to believe in what you're doing, have a history of showing results that are obviously adequate, profitable. I'll use that word. Again, past performance is not indicative, blah, blah, blah. Thank you, NFA and CFTC. So there's the technique. Now, one of my tools is that bullish engulfing for buy signals, but it could be a bearish engulfing. Now, the other one is a customized relative strength index, and I learned it from Wells Wilder himself. And I don't like, but I also like it, to see oversold conditions and then a bullish engulfing within a certain time frame. If I have those two things, bingo, I will have a green price bar develop on my charts. And if there's a sell signal, which we had one about a week ago or so in the NASDAQ, this is the spider also, it didn't work very well. It was profitable for a couple of days. Not all of the signals do exactly what I'm hoping they should do. No system is 100% profitable. But some of these are profound turning points, and that rallied about a week or so. This was the top of the market for a few months, and that's a red ER sell signal. And as you can see, I've outlined a little head and shoulder top there, which worked pretty well overall. Almost got to the objective. So this is the October timeframe. My cyclical analysis tool has a lot of flexibilities. Let me quick show you. This is the EC Forecaster. We have a little menu, custom menu up here. If you want to shift the date on which you're starting to look for a cycle, as a matter of fact, I'm going to do this for you, Tom. What symbol would you like me to do analysis on real quick? It'll take me about 1 minute.
Oh, well, let's take a look at gold. Can we do that? Or you want a stock single?
No, that's okay. Hang on a second here. Gold, good. I've got a preset chart, and I'm going to remove the cycle for the moment.
Okay.
And I'm also going to remove it from, so it's kind of like going from scratch here, unload it, period. So now you got a plain daily vertical bar chart, could be candlestick, doesn't matter. And you've got my custom code on this. So you're seeing a lot of white, and I don't care about days that are white. If I see yellow, then I know it's either overbought on the way up or it's oversold on the way down with my custom RSI. And just a second. Okay, and here we go. It doesn't look like RSI, which Wells Wilder's connected the closing price to the next closing price, et cetera, a line chart. This shows you what the RSI was at the high of the day and what the RSI was at the low, of course, at the close. So during the day, and we do this every minute, or actually tick for tick. If during the day, if you reached my custom RSI level, which is 75, not 70, it will turn the price action and the RSI. It's only a warning, like a traffic light. And when I get the combination of an ER outside down day, that's a bearish engulfing, Japanese candlestick, standard stuff. Although I customized it just a little bit. It's relative to the close, relative to the previous close, not the close relative to the previous high or low.
Okay.
So it's a little different than, gosh, I'm not remembering his name at the moment. The guy with
Steve Nissen.
Steve Nissen. Yeah, I actually introduced him once at a seminar. And very nice guy, very interesting guy. So if I get those combinations, I get a signal. Bingo, right there. How you work with the signal is, to a great degree, up to some of the users out there. This is a gigantic sell signal here in gold at the top of the market. And yes, indeed, during the last shoulder high, and gold did make a head and shoulder top. It wasn't a very good one. We've got the first shoulder high, basically the high of the pattern, and almost the last shoulder high, which is right there. All three parts, which is unbelievable. We also have a cycle low, ER signal bottom green. So what you really want to do on my custom charts here is only look for red and green. It'll happen during, before, or after yellow, but here is a green signal that didn't work at all. As a matter of fact, that's an embarrassing one. It was a buy signal. I got stopped out really quickly and lost very little on that trade. That was great. That's what I love. It's at the bottom of a move, and for a couple of weeks, you made very good money. That's at the top of that one. Let's drag here to the left. Top of the market, bottom of the move. Rally high, didn't work all that well. Couple of green in this time frame, excellent. And we're going back to September of 22. I think I've got some more signals here that have been whoppers as well. That buy signal. So you see what I'm doing is isolating as best I know how the kind of price movement and indicator levels that put together for me and a lot of other people that like what I'm showing them, turning points, and just simply highlighting that for you in colors. We could put a pointer, we could do other things, but look for red and green. And if you get red and green, you get a signal and you can use it to trade, or the ER automated trading system trades for you. And there's 4 variations. There's the scalp for ER1, gets in and out the same day of the signal. And then there's the ER1 overnight, which could hold on for a few days, a swing trade, or maybe even a month or two. That's kind of rare.
Yeah.
There's ER3, which gets in the next 3 days after the signal, but not on the signal day. And it has a scalping version and an overnight version also. It's kind of meant for longer term trades, ER3s, but it does miss some of the signals. And ER1 does not miss any of them. It's always getting in the day of the signal. So if you see red and green, you have to assume you got in somewhere. And depending upon how you manage the trade, how you move your stop, and my stops are automatic. And by the way, the stop is not a percentage of value as the market moves or a dollar amount that's static. It's a dynamic combination of the RSI levels and price movement over time. So as the market moves down and you're hopefully still short, RSI is going to be moving down. And that causes the shrinkage of the amount of space between the low on the bear move in progress and your trailing stop above the market. It gets closer and closer and closer. The more the market goes down, the faster it goes down, the quicker my stop drops. And in fact, I've ended up getting out sometimes at the low day because of spike bottoms, or sometimes called V bottoms, like that one, for example.
Right.
If I had been short, and I probably wasn't, this is very obviously a extreme oversold condition down to about 9, under 10. And I got a signal, thank goodness I crossed my fingers here. And it happened. Was that October? Yeah, it was another October. Of course it was.
Well, so I think, Stan, what's really important about this whole, what you've been talking about is that concept of making sure the stops are in, because like you said, nothing's 100%, and you will have those signals that say, you know what, this is indicating maybe a long trend, but it doesn't follow through, right? And we saw that last week, like with the E-mini, right? Where you said, oh, it looks like it's topping. We got this signal and it was good for a couple of days, but then NVIDIA comes in, rescues the market, and the market resumes its uptrend, and you've got your stop in, right? So I think that just reinforces the importance of stops, because nothing is 100%. We know that. And if it's really why risk management is so important when you're trading.
It's one of the most important keys, period.
Yeah, exactly.
And we do, again, automatically, the ER signal strategy for NinjaTrader and TradeStation automatically puts a stop in the exit. You're in a long or short position. And it
Okay.
may move that stop many times, maybe hundreds of times a day, if the price movement is moving a lot, granted, in your favor very quickly,
Right.
which doesn't happen every day. Of course, I'd love that, but it does happen occasionally. And if you're watching, let's say 5 or 10 symbols, different markets, you have favorite stocks, you have favorite commodities, maybe a favorite index, the E-mini, for example. There's no way an individual, a human being, can track that many stops that quickly and move them that fast without automation.
Right. Right. And that makes sense, because if the market is moving quickly in one, it could be something that's happening in another market, and you just can't keep up with
It will
multiple
be something that happens. So
adjustments.
you just said it a moment ago in video. So,
Right.
I don't watch NVIDIA, but I'm going to watch it now because it looks like it's about to top out. We'll see about that. Upside exhaustion gap, extreme overbought conditions. I don't have a signal yet. Could get one any day. Now, you're never going to know the underlying fundamental reason why a market's doing what it's doing. Yes, you can look around. Yeah, you can look on CNN and CNBC, and I was on CNBC 3 times. That was kind of fun and scary too. And other sources of information, but they're all ancient history. Even 5 minutes old is old. The move in the market has taken place because of something happening that you had no idea was going to happen or foresaw in advance. It
Right.
takes you by surprise. And it's always when you're in the bathroom, guaranteed. So you have to have a trailing stop. It's got to protect your equity and protect your profits. I call them smart trailing stops or protective stops, not stop loss. Don't like the phrase stop loss. But they're all the same thing.
Right. We
They're all
don't.
the same thing.
Sure. Sure. So maybe we could switch over to let's take a look at some of those ER signals, because
Absolutely.
we touched a little bit in gold. Uh,
You want
yeah,
to look
this
at
is great.
futures and stocks.
So let's take a quick look at crude. Yeah, crude is good. Gold, we didn't see a lot. We've been talking about gold consolidating. It's been stuck in a
Lately, it hasn't
range.
had very many signals, but gold market had
Right.
some unbelievable whoppers, and silver last year.
Yep.
Top of the market, and what was that? 23 July 20th. I think I can do better than that. So top, when I say top, I mean the high day. If I say
Sure.
close, I'm talking a day or 2 or 3 from the bottom or high day, top or bottom day, and it's probably not very far away in price. That's the bottom.
Right.
Unfortunately, no tops in here. That was a bad combination. That was a great top. That was the low exactly. That was the low exactly. That was the high exactly. That was the high exactly. That's all last year. Each one of them has that scalp and overnight version of the trades. And you can, and I encourage it, change the rate at which the stop moves. Now, my entry algorithm is damn good, period. So I don't allow people to mess around with that in the code, but you can justify and adjust both how quickly you want to move your own stop, protect the trade. I do allow people to try to trade long-term by moving the stop slowly. What we call a kicker, the kicker, kicking a can down the alley in the old days. So if the kicker is a large number, it'll move the stop slower. It's kind of like, but it is not a moving average. But it's kind of like that. And if you have a small number, it's going to move the stop much quicker if you're very scalpish or swing trading inclined. So all 4 have adjustable trailing stop inputs. But the entry technique, that's locked in stone for the ER signals. And you're looking at the entries and the stops, how you get out, depends upon the users. So I've got some default numbers. I think I got some numbers that are working pretty good, but it may not be the right one for you. But so, it's custom fit.
So we were talking before the show,
Yeah.
Stan. Last week we had, I don't know if you've met Sterling Smith. Sterling is an agriculture analyst expert. I've worked with him at Bloomberg. I know Jim's worked with him in his Chicago when Sterling was out of Chicago. I think he was at Citigroup or whatever Citigroup was called 20 years ago. We had him on last week and we were talking about corn. Can we look at that corn chart in terms of the ER signals?
Here you go. NinjaTrader, you're looking at the red and green. That's what you really want to watch for. And yes, we had one on Friday. Wait a minute. Yesterday, Monday. And that's maybe the bottom of the corn market for quite a while. Why would I say that? Not only is it a buy signal, but if you look back historically to, this is a continuation contract, September of 21, you come up with almost exactly the same price for a major bottom. And oh, gee whiz, I am so sorry. Another ER bullish signal smack on the bottom of that day. Is it going to repeat again? Well, maybe. All I can say is I got a signal yesterday and it's up today, but I can't put my crystal ball out there 6 months and say we're going to be going back up to 700 and something, and we're at 400. There's always a possibility. Don't want to encourage people to think that, though. I mean, most of these signals only last a few days to a few weeks. Period.
Right. And so, that's a great point, I think, is the signals are identifying a set of circumstances which you've talked about with the RSI, the candlestick formations or the patterns, if you will, that you've modified. And but it doesn't talk about the intensity of the move, right? There's nothing.
Excellent point.
There's nothing.
Yeah.
Right. And that's why we have the stops, right? Because we don't.
Yes, exactly. I know from, the experience I've had that this combination of an oscillator that is extremely oversold, and it could be stochastics and it could be other oscillators, but they do about the same thing in a different way. And a traditionally well-known and well-used signal, a bullish or bearish engulfing, those two combined have turned out to be a very, very powerful tool. Now, you can use your traditional candlestick and you can use your traditional RSI or stochastics to come close to what you're looking at. But then how do you actually implement the trade? What exact excuse do you have? Reasoning do you have? Algorithm have got? Code did you've written to get in exactly at that particular price? Why did you do it at that price? If you don't have reasons that you can duplicate that again and again and again, you're trading from a subjective point of view or an objective point of view. So, or emotional. And that is not good. You remember, you are your worst enemy.
Right.
This activity of trading is very strange. If you want to trend trade, well, we're not talking about that today. We're talking about picking tops and bottoms. And that's what I like to do. That's what my endeavor is. And you're looking at many having been picked successfully with extremely exact rules.
What I like, Stan, too, about the ER signals is the color coding, the heads up nature of the yellow, right? So if you've got a white bar, you say you don't even look at them. Fine, that's great. But when you get the yellow bar,
white just means it's not overbought or oversold. That's all it means.
Exactly. It's kind of sideways, or it overall it's sideways. It doesn't really give you an actionable look. The yellow says, hey, heads up. And it might not always grab the high or low. Nothing's 100%, but it does give you that idea that something might be happening. And if we don't get it with the ER signals, I could see this complementing something, right? So
yes,
you look at the ER signals chart, you say, wow, yellow is happening. I don't have the green yet, or I don't have the red yet, but maybe I have to pay close attention to this future, right? We're
Yeah.
looking at gold still, or corn. We're looking at corn.
Corn.
I,
It
you know,
doesn't
okay,
matter.
so
What you're saying applies to every
right,
damn market, right? Right.
right, exactly.
So
So the heads up nature of this study too is informative, right?
yes, here's cattle. Top turns out to be a double top. We actually got both highs
Hmm.
on the double top formation in cattle with this strategy.
Yep.
Silver. Where's my silver? Bingo. This is very much like cattle. If I isolated this time frame and removed the price range from the side here, you wouldn't know the difference. There's two spikes. It was a double top, in this case, almost exactly at the same tick. And lo and behold, on both highs, you had a bearish engulfing ER sell signal, both of them.
Yep.
I was flabbergasted when I saw the second one. I love that word, where I don't know its origins, but anyway, when I saw the second signal happening at the exact same price only a few weeks later, and I'm going, holy moly, this could be a double top formation. Of course, 2 months later, I'm saying, told you so.
Right. Right.
Yeah. So, I have to say it when I see it. If you don't,
Right.
then it's after the fact and it doesn't really count. And that's what I do every day on my YouTube market analysis with futures and in Ninja charts and the ER signals. I isolate and go through stock indexes and futures, and sometimes Forex and sometimes sectors. And I may even touch on a crypto now and then, but not too often lately. But definitely futures and indexes every day. It takes 15, 25 minutes, and that's the end of that. But I did, and I do isolate these signals the day that they happen. Like yesterday, and was it corn? I think, yeah. And the cocoa didn't work. I had a sell signal a couple of days ago. But don't look at the sell signal and say, wow, it's now way up here. How bad can that be? I'm stopped away. This system
Right.
does not stick around to get hurt. We have a relatively tight or just plain old tight stop, long or short, and it starts to move in your favor very quickly if price behaves. This did not behave as expected. Now, this little signal here did come down a little bit for about a day or two. And as you can see, the yellow dotted line starts to drop like crazy, which is our stop. And it got stopped out probably with a scratch trade, no loss, no profit to speak of, but the price didn't cooperate. Thank goodness we got out. There was also a trade just like this in Ninja a few days, not Ninja, in the NASDAQ a few days ago. And it dropped for a day or two. And my stop dropped enough to lock in a profit. And it was only a couple of days ago, wasn't it, when that all of a sudden in the last half an hour, there was a huge rally.
Right.
I got
right.
stopped out of that short position, which I put on 2 days. I think it was 2 days earlier on that rally and took a profit. I'm going, darn it. I think this is going to go down some more. Luckily, I didn't do anything about it. The code said, you're out. I just sat there with, crying in my beer, and it went up higher. And so I'm happy.
Well, and that's why it's a protective stop, right?
Right,
You didn't have a loss.
exactly.
You took a profit.
Procrastination is another word I love in this business, because if you do it, you're dead.
Yep.
There's two reasons. If you procrastinate putting your stop in, all of a sudden it's going to be when you're in the washroom again, and bingo, it's going to hurt. So having it in advance and all the time is very important. Oh, one little cute little piece of my code here I'll tell you about. We have something called gap code. If you're short, and let's say you have a small profit or a big one, I don't care, and the market gaps up against you, normally people will put in an open order protective buy stop, and they'll leave it in as a GTC over time. But our strategy actually does not even have an order in for the first few seconds of the trading day. Every morning, we want to look at where the prices are opening. And if the prices are opening at or above your previous stop, yesterday's stop, which is not in the market at the moment, then we add a little bit more to the stop above the high of the first 60 seconds of trading, in order for the market to hopefully, and it usually does, go right back down a chunk. And I've
Right.
seen examples of this where the market went not back down a chunk, it went down lower on the day and turned a losing trade into a profitable trade.
Wow.
We'd sidestepped the getting stopped out if we had used a GTC order and watched to see what the opening was. If it's the same, or it doesn't hit the stop, I should say, we put the same stop back in again and go about calculating how to move it as prices move in our favor, against us, etc. But that's the only time my trailing stop moves in the wrong, quote unquote, wrong direction, is when you have a gap past on the other side of your previous day's stop level. We take care of those kind of gaps. Most systems I know of don't.
That makes sense because you're letting the trade breathe a little, right?
You could call it breathing. Yeah, it's kind of being choked. You want to take the choke off of it.
Right. You understand that at the open there's a lot of volatility.
Yep.
But for that volatility, you expect the trend to resume. So let's alleviate that stop a little bit.
Yeah, and we just make it a little bit wider. You're already screwed, right? If your stop was going to be hit, you're out. If it was a GTC order, you're out. So we allow for that phenomena where it's very, very true. Don't trust what I tell you. Look it up yourself. That if you have a gap up market, especially the larger ones, the high of the rally is very often within a couple of minutes after the opening. It's immediately absorbing that panic buying. And now all of a sudden things settle down and the market drops back again, sometimes closing the gap, sometimes going further than that, sometimes not quite closing, but it does usually drop back down a chunk. And that gives us the opportunity to start pulling that stop down again, probably to where it used to be the previous day, or even lower, again, depending upon how much weakness you get. And the same thing happens on bottoms, gap down situations that turn around and go right back up again. And if you look at a very short term, by the way, 5-minute RSI or something like that, that thing will go screaming up to very, very high levels or very low levels on gap downs. If you're using a very, very short term RSI, not the daily, but like a 5-minute, a 1-minute, maybe a 30, and that will happen. It's another tool to use on extremely short term scalping type of activity. Those opportunities, if you got the guts, really represent a great entry point, gap up and down openings.
Yeah.
But nobody has the guts.
Stan, we're running up against time. We're into overtime. I want to give people the chance to, learn more about where they can find you and your work, because like you said, this is on NinjaTrader and you're working on adding more of your work to NinjaTrader. Where can people find you?
You can email me at info@ersignals.com. My website, which is going to be containing all of the samples of stuff and examples and track records and so on. For the Cycle Finder tool, again, these are available. If you're interested, ask me on my email, this simple little silly tool. I can't believe it ended up being so popular. It's just ridiculous. But hey, if it works, it works. And it does. It's written up in many books, including John Murphy's technical analysis of the financial markets. I'm on page 380 or something. Yeah. And that's the Bible of technical analysis. Enough said. And about 20 other books, give or take. So anyway, if you have questions, I can answer them, hopefully. info@ersignals.com. And thank you for asking, Tom.
Yeah, my pleasure. I mean, I can't recommend enough, for our viewers to reach out to Stan, ask him questions.
Here's that trade, by the way, on the NASDAQ. Sell signal a couple days ago, a week ago. So 2 days, 3 days actually later, that's the day when it had a really fast rally in the closing minutes. And in fact, okay, I'll just do this or this one. Okay, here it is. Here it is on a 1-minute chart. Come on. There it is. There it is. So this is a 1-minute chart. Let me squeeze. And I'm showing you the signal. The date was the 16th of February. just recently. We got short, not particularly gracefully, relatively close to the low, but it did close with a small profit on the first day down here. The green dotted line represents the equity plot until we get out. It's always moving up and down as long as you're in the trade. That's Monday, the holiday, so the market didn't go anything. It went sideways. Tuesday of last week, it dropped like a rock, so I was smiling ear to ear, and it dropped even more on, I guess this was Wednesday, but it started in the last half an hour going straight back up, so I got bumped out, like I said, on the rally. That's
that was right before NVIDIA reported, right? NVIDIA reported
it. Yeah, I would think to say it was during.
If it's after 4 o'clock, I think there was this rally into the close, and then they reported, and it Jim made a comment to me, kind of privately, was this, were the expectation or the results leaked early, or does somebody know something? Because that was just an amazing rally. Before we even everybody was talking about NVIDIA. We got to wait till after the market closes. Maybe somebody didn't want to wait.
Typical.
Right.
Trade. Okay, I love this one. Trade the expectation, reverse on the realization.
Okay.
That's buy the rumor, sell the news.
That's right.
I didn't say buy or sell. I said trade. That could be meaning going short on a bearish expectation and covering on the realization. And that's the same thing as buy the rumor, sell the news, except it's the opposite.
Right.
One of my favorites. I got more than a few.
Stan, thanks so much. It's our pleasure to have you back on Traders Workshop, and hopefully, we'll be changing some things in the future, but they shouldn't be changing to you. We'd love to have you back on, of course. And I do wish that our, you viewers can go reach out to Stan and learn more, because it's great work that Stan does.
I do tutoring also, if anybody's interested in tutoring.
Awesome. And again, I want to thank all our viewers for coming to Traders Workshop. We'll finish the day today. Bars closing as usual. Today, Jim will be there to review the day's events. He'll follow through on some of the trade ideas he had, see how they're percolating. In the meantime, I want to wish everybody a great trading day. Take care.